banks are controlling your money. And I'm going to show you how. My name is Kyle Knott, and I'm not your average finance guy. Today, we're going to talk about control cost. So the banks will give you a very, very little interest rate. Right now, I think the national average is right around 0.5%. So I made a little example behind me that a bank will pay you, if a bank pays you 0.5% to control your deposit. So let's say we got a couple examples of $1,000 deposit at 0.5%. They will pay you $5 per year. So you say, here's $1,000, and at the end of the year, the bank says thank you, and they hand you $5, or maybe it's however they pay it, quarterly or whatever, but that's what it ends up to be. So you just add a zero to these numbers. If you bump your deposit up to 10,000, as you can see behind me, the bank will hand you $50 at the end of the year. If you hand the bank $100,000 because it gives you a nice warm fuzzy and you want to keep it safe, and for doing that, they will give you $500 at the end of the year. So at the end of the year, you'll have $100,500. All right. Now, if you think that's a good investment, I'll show you what they actually do with that money. So what they do is up on the other side here is they've got they took your $100,000, and let's say that they loan that out at 4%. Show me a bank that will loan out money at 4%. It's probably not happening, but this is a bare bones example, and we're just going to run through the numbers. So $100,000 at 4% is $4,000 per year. So what they did is they took your $100,000 and they gave it to someone. Maybe it's for a house or a nice car, or who knows, whatever it is. And at 4%, and at the end of the year, whoever was making payments back, they paid an extra $4,000. Okay, so at the end of the year, the $4,000 they made minus the $500 that they gave you, the bank made $3,500 on your money. Which, if you look at it that way, even if the $500 was theirs, that's 700% return on investment. And it wasn't even their money to begin with. So I don't even know how you calculate that. All right. So if anyone would like to give me $100,000, I would love to give you $500 per year, and I will take your $500,000, and I will put it into a vehicle that is guaranteed at 4%. I could probably do way better than that, but I'm going to do something that's guaranteed at 4%, and I will make that spread, and I will put an extra $3,500 into my pocket every year, and I will give someone else $500. You take the banking function away from the bank and do it yourself. And that's exactly what the infinite banking concept is. Instead of giving all of that money to banks, you make this process and you build your own bank, and you never really have to take a loan again. Now you can take money, and I just got into an investment last week that I took a big chunk of money out. I took a loan against my infinite banking policy, and I gave it to someone else, and I bought a note. So they are going to pay me. I'm paying my policy right now 5.6%. So I took a loan against my policy. I didn't take the money out. I took a loan against it at 5.6, and I loaned it out, and I am going to get 14% per year. So what's that spread? That's exactly what I'm doing. Now, as I get payments coming in, I'm going to dump it right back against my policy. And once that's paid back, because I get the spread, I'm going to have a lot more money. As soon as I have a lot more money, I go out and I can do it again. Now, that was a pretty good investment that just came across my desk, and I was very happy to participate in something like that. Now, depending on what your risk model is, you can go big, you can go low. I mean, no risk it, no biscuit, but usually the higher the payout, the higher the risk is. It's risk. They might not pay anything back. So I looked at the deal. I feel it's pretty good. So that was one I was happy to do. And so this kind of stuff is all over the place if we can just look in a different way. I wanted to make this video because I got a comment the other day that says, don't listen to this guy. He doesn't know what he's talking about. Put your money into a bank. And hey, that's fine. If you want to do that, cool. Keep making the bank rich. All right. If you want to get rich, do what the bank does. That's all I'm saying. You don't have to follow anything I'm doing. I heard something the other day that says, I speak a truth. And it might not be the truth because it's a truth. It's what I do. It's what I believe in. Now, someone else may be ultra conservative and never take any kind of a risk and never do anything to get ahead. And they're the ones that are making $500 a year. I'm going to take a little bit of a risk, and I'm going to make $3,500 a year. Okay, by taking basically an asset that I have and borrowing against it, not taking it. So there's so many different ways that you can do that. And I kind of wanted to touch on that I know this isn't for everyone. And I've talked to people before, and I get the vibe that this might not be for you. And I don't think you should do this. And I'll be the first one to say that. But if you are interested in doing something like that, or if you want to give me $100,000 at I'll even give you, I'll give you 1%. I'll double those numbers there. I'll give you $1,000. If you give me $100,000, I'll give you 1,000. All right. So go ahead, text Kyle to 855-529-1388, and we can run your own numbers. We can run your own simulations, situations. I'm not asking for a credit card. I'm not asking for payment. I literally just want to help you guys. Okay. Let's take a look at your situation, what it is together, and I can run a simulation, and here's where you are, here's what your goals are, and it'll spit out answers. And if you like those answers and you want to move forward, cool. If not, I don't know if I like that, or if you want to tweak some things, walk away. It really, no pressure, not whatsoever. I just want to help you guys out. So, all right, if you like that, shoot me a text, and I hope to help you guys out, and good luck.